Welcome back to Ferocious Education. This is Ed. Today we're going to be talking about XLFLEET. You want to know how this one can easily crush the shorts? Stay to the end. Let's jump right into this one. So XL. We've heard a lot about this one. I've covered it, but the last time I've covered it, the short seller report hasn't hit yet. And since then, it really did get a good hit from the market dropping down a little, followed by the short seller report, followed by CNBC declaring the short position, all these things going on in together and not really shaping up for XL. But today I'm going to give you a better aspect of it. And before I go towards the news and address all these allegations and stuff, and by the way, we want to look at the short seller. In terms of the short seller report, I see this as a positive thing because the company did come up with another PR that ended up explaining each of these discrepancies that they might have even found or false claims and supporting it with good documents. So we'll go over that, but that is a bullish thing in my perspective because it opens up more information to be put out there. So for this company here, they have three different phases here: class 2 to 3, 4 to 6, and 7 to 8. Now, the most important one that really doesn't have much competition is 7 to 8. And 7 to 8 here, this is in future developments, and they're actually working with different partners, such as for Refuse Trucks. And if you watch my previous videos, you'll get to know about that. And a big part of that is a lot of these trucks are either gas or mostly diesel. And having put them into such thing like even HEV or PHEV, EV or FCEV, this will dramatically reduce their emissions, which is something that a lot of the world is actually going for right now. So that is something that a lot of people keep missing on. And if we were to look at the projected units sold, you're getting to see that currently you're selling around 4,284. The projections there is around 9,234. Models available and announced currently are 9. That's based still back from a while ago. And we're going to move on as well. We get to see some of their customers. It's pretty much of a diverse set. We already know they already have customers based on the news, etc. And their actual proprietary powertrain that they've made themselves. And the list goes on. And I want to go back towards now the short seller report to kind of discuss it a little bit because it helps us give a bit more of a explanation on what their operations are. But before then, we have this one that just came out on the 17th. XLFLEET opens a fleet electrification technology center in Michigan. Nearly 25,000 square foot facility in Metro Detroit provides access to leading automotive and commercial vehicle engineering talent. Company expects to increase its engineering headcount by 50% in 2021 as it continues to rapid expansion. Michigan Technology Center is XLFLEET's fourth location, expanding strategic nationwide coverage for customers and partners. The almost 225,000 square foot facility is located in the heart of the United States' top-ranked region for automotive engineering talent and will serve as a fleet electrification technology center to support design, development, testing, and production of a wide range of commercial vehicle electrification solutions. The state-of-the-art facility there will have all these different things, including design, etc., programming, technology capabilities, electrical, and system engineering. The facility will also include a component test lab that includes vibration capabilities and a vehicle chassis dynamometer, electronics lab, and a battery testing equipment. So there we go, we have a bit of this one here. This is absolutely bullish in my perspective. We can go ahead and take a quick look into the inaccurate information that was shared by the short sellers regarding this one. So XLFLEET's technology is validated by independent testing facilities adhering to EPA standards and backed by real customer experience. XLFLEET has revenue growth, positive gross margins, proprietary technology, repeat customers, and over 4,000 systems and more than 145 million miles on the road. XLFLEET has successfully sold the majority of its electrified powertrain without subsidies in an industry which most sales have relied on incentives. XLFLEET has highly experienced technical and program management teams that have successfully developed a broad range of electrical powertrain systems. XLFLEET will report fourth quarter and full year 2020 financial results on March 30th, 2021. And I'm going to show you a little bit of what my earning anticipations would be and the end of the video to give you a bit more perspective based as well of a lot of the news that they've had recently. So XLFLEET, I'm just going to go for each of these claims and we're going to go ahead and talk about it. So actually I think a better perspective is to look at it here through the claims, the key topics, and what the response was. First one, return on investment calculations. The short seller said, in its ROI calculation, short seller represents a deeply flawed analysis showing a negative ROI of 53.1. In fact, the total cost of ownership analysis, including an XLFLEET investor presentation, is accurate and based on fact-based inputs and assumptions. The company reiterates its ROI conclusion of the representative fleet of 55.7. Fuel saving. In its ROI calculated, short seller wrongfully assumed fuel cost of $2.5 per gallon. In fact, the average fuel price in XLFLEET customers markets is approximately around $3 per gallon. Approximately 25% of XLFLEET units are in Canada, where the average range of fuel is approximately $3.70 per gallon. Approximately 10% of the fleet units are in California, where the price of average fuel is approximately 3.56 gallons. The current average price in the US is approximately 2.71 gallons. The $3 per gallon figure utilizes by XLFLEET analysis is accurate. And then vehicle life. And the short seller said in its ROI calculation, short seller wrongfully assumes that a service life of 5.25 years. In fact, the short seller service life assumption of 5.25 years combined with its yearly mileage assumption of 23,520 miles would imply a total service life of less than 125,000 miles. Commercial vans' expected lives are around 250,000 plus miles. Of the 4,000 XLFLEET systems on the road, approximately 335 customer vehicles have driven over 125,000 miles, and more than 22 customers have logged over 250,000 miles. A majority of XLFLEET vehicles on the road are not yet even fully halfway through their used life. The 10-year service life utilized by XLFLEET analysis is accurate and conservative based on industry norms and customer experiences. So maintenance feedback. Again, what they did here is in its ROI calculation, short sellers wrongfully assumes the total maintenance savings of $20,000 or just $200 per vehicle. And what they responded was, in fact, it's widely understood that a hybrid system captures energy normally dissipated in the brake heat, causing wear. Instead, the energy stored in the battery for use later helps accelerate the vehicle in a process called regenerative braking. This helps add significantly to the vehicle's brake life. XLFLEET's analysis assumes normal brake pads and rotor replacement every 40,000 miles, which carries a part and labor cost of $650 each. For the reference, the Green American report referenced herein states that a hybrid car brake pads last 3 times as long as a conventional car, reducing the frequency of brakes replacements. And they did mention as well, including this one here, which is an article of research. Fuel economy. It's in a report, short seller wrongfully states that XLFLEET's claims of 25% extra miles per gallon gains are incorrect and misleading. And they said, in fact, XLFLEET's fuel economy performance has been validated by independent sources, including automotive testing, developing incorporations in ESW America. Additionally, short sellers does not properly account for the significant impact of other variables. With any motor vehicle's actual customers' miles per gallon heavily depend on a range of factors related to how the vehicle is used. This is especially true in the commercial fleet market, where the traffic patterns, payloads, drive cycles, amount of idling time, and weather have significant impact on actual performance. And then the last two, driver cost. In its ROI calculation, short seller assumes that the driver cost of $18.52 per hour. In fact, XLFLEET's analysis is based on a fully loaded cost of labor of $50 per hour. This figure reflects the blended nature of XLFLEET customer drivers, which include service technicians, utility workers, government employees, and other specialized trades that cost even more than $50 per hour. I don't know a truck driver or a utility technician that takes $18.50. I've worked in that industry and usually it's around 40 and above. System cost. It's in its ROI calculation, short sellers wrongfully assumes that hybrid kit costs around $17,000. In fact, in analysis based on pricing, XL's hybrid transit van system of $13,000 per system, this pricing is based on actual 2020 customer orders, including estimated cost of installation. So there we go, we have a good amount of information there that gives us a bit of perspective about the company, and the list even goes on. It actually goes on even deeper and deeper. I just didn't want to waste a lot of your time going over all this stuff, but it's definitely worth your time reading over. And the next thing we want to look at is before going on with XLFLEET becomes electric transportation partner of UBS Arena, and New York Islanders plan to deploy 1,000 EV charging station, which is a bullish thing as well. We need to take a quick look into their quarters, the quarter earnings, and how they changed to anticipate the next quarter earning. And so from a financials perspective, I did go ahead and open a few of them. So September 30th, 2019, June 30th, 2020, and September 30th, 2020. So to get a little bit of perspective on what direction we're going from. Currently, back in September 30th, 2019, we saw a net income of around $665 million, but the basic diluted shares was around 0.01. Not sure how accurate this is, but it is on an SEC filing that they do have. So loss from operations was almost similar to, or actually it's a lot less from the income itself, but this was more around interest in securities, etc. So taking a quick look mainly on the June 30th to September, what we see is loss of operations on that net income. We're looking at 102,000, I believe. I'm not sure if this is million. No, it's definitely 102 million, even though it doesn't show thousands here. 102 million compared to 1.8 billion loss. So definitely things are looking a little bit worse, especially if you were to compare it from year over year. And I do anticipate that in the next earnings, it will probably be a little bit better because of all these customers that they're having, including fleets of charging stations and their technology being there and having a lot of that coverage. You do anticipate, because they're also expanding, right? Why would they expand if they weren't still making some money? And so I do anticipate that it's going to actually go ahead and go look at a little bit better, but the exact numbers, it's hard to tell at this point. But one thing that we're going to get out of this one is the total assets they have post SPAC. And a good benefit out of this is things like the statistics of price over book, etc. That will be updated as it was currently 0. And the price over sales will actually have that as well coming up, because currently it's sitting at 163, but this is a trailing 12 months ending, so it's not the most accurate, and we need to get a better perspective on that. Before we move on towards technical analysis, if you would like to see more videos like this, more materials like this, make sure to subscribe and leave notifications on, and you can join our Discord in the description below. And now we can go ahead and move on towards technical analysis. Now from a technical analysis point of view, on a 1 week perspective, things are looking a little bit rough on the MACD. We're actually seeing a -1. It hasn't leveled down yet, and momentum is the worst it has been for a 1 week perspective. Now, the current point that I think it would start getting bullish is if it would reach the $15, because this is the trading action zone between $16.84 and $15, where positive reversals are likely. And if we were to get to there, with being oversold currently, and the momentum being a little bit negative, we might actually get a good boost there in terms of a correction towards the positive side. Now, on the 1 day perspective, what we see here is that the MACD is actually gone a bit positive. We're almost tending towards an accumulation period, but we need to jump again above the $15 to see any action. Momentum is still negative, not the worst it's been. It's still negative, but it is definitely recovering back from the 950. Again, the market here was a lot worse than it is currently, and so there is an indication there that it's not just XL dropping. XL had a couple of things, including short seller report that time, the market trading sideways and dropping a little, so it did definitely had a hard time around that area. Now, moving on now towards the moving averages, we see this one is expected to trade 1456 on the top, 1324 in the middle, and 1192 in the bottom. And stochastic fast and stochastic slow, what we're seeing is that we might actually see a little bit of a pullback here, and this is indicating by this kind of curve downwards we're seeing. So for this, we need to understand where our supports and resistances. Before going there, we're going to do the Fibonacci ones. Significant support on the Fibonacci scale is 950. Resistances are 1552, 1924, 225, 2526, 2954, and $35. Now on a price line action, we get to see the significant support is currently right there, 1191. Below there, we're looking down at a 1096 and then to 1033. Significant resistances are 1282, and then we're looking at 1340, 1418, 1609, and then we're jumping just a tad up towards the 1857, and then going up to 1989, and then 2233. Comes to the question to Ed, what do you think about this one? Well, I'm a little bit worried about this thing that has started looking like an inverse cup, and that is a bearish thing. But if there was anything towards an inverse cup, is that usually it has a handle, And so you might actually be able to trade that. Now, in terms of an investment, I'm a firm believer that this company will get its day, it will shine, especially with the massive adoption of EV escalating up, and a lot of these older bigger classes, class 7 and 8, such as refuse trucks, etc. It's a lot more expensive for cities, especially after it's been hit with the pandemic, to spit off or put up the cost up front for all these electric vehicles, etc. And I do think that this will actually give a cheaper option towards lowering their emissions and thus becoming more green. What do you think about this ticker? Make sure to mention down in the comments below. Share, subscribe, and like. Have a wonderful day.